back to where we were. This is part two. So we're looking at this. We're looking at 5 minute structure. I understand that we're looking at the whole day play out, but we do this on purpose. So when we are looking at the live market, we can understand what price is doing, and we just use it to better our intuition and our skills, and make more informed decisions to make better trades in the future. Right. This is called deliberate practice by looking at what the market did and why it did it. Everything is done for a reason. The same way everything in your life happens to you for a reason. It's so you can stop saying, why is this happening to me? And you can start to say, what am I going to learn from this? Okay. So as I previously mentioned in the first video, 5 minute W over here. So it's like that. Boom. Take it up to there, right? Beautiful trade. We're running toward this imbalance over here on the 5 minute. Taking it down over here. Right, first trade, second trade, I would have taken, I want to see a closure over here, closure below this candle. Right, we close below and have entered over here. It's a 1 minute bear flag, as I indicated in the previous video. Take that down, this nice continuation pattern, run all up to here. Where we understand that we just broke structure, we made a new lower low, right? So we're going to make a little push up to make a new lower high, which is going to be this point over here. You wouldn't have been able to hold this because it would have eaten up a good amount of your premiums, and you would have lost a good amount of money. You just don't know what the market will do. It can have easily came back down here and ran back to the top and easily kill all your profits, right? You want to have some level of profit management and money management to make sure when you do win, you're not giving your profits away, right? I understand that you can either be a scalper, you can be a day trader, or whatever floats your boat and fits your lifestyle, your personality, and the amount of time that you have to trade. That's two trades right there. Third trade, right? We have the formation of a 5 minute W, right? This is a tricky one because we can see that on a lot of the time frames, especially on the lower time frames, LTF, that they're bearish. So you don't want to take something, just take this piece over here and buy it. You could speak from market structure perspective that we made a new lower low, so we have to make a new lower high, and from that aspect, yes. But then that begs the question of, we don't know when the market will kind of settle in terms of that market. In terms of that leg down, you don't want to buy a leg down and you don't know when the leg down is stopping. Right, it's pretty impossible to tell when it's going to stop. So the better execution would be over here, where you see we're basically not going lower, and this is on a 5 minute, so I would have seen this as like a 5 minute, basically U within this bigger U, and I would love to take it toward over here, imbalance over here, and then you take it to wherever you can take it. So this is a little bit, basically $1. So a good trade. It's 3 on the day, right? And then you would have been able to take this if you were to take this. If your capital allocations allow you to take this. So, but I think that the more high probability confluence trades were to take probably this sell-off over here and this one over here, because it just has the most confirmation. The other ones are more of like a kind of a feel. So these ones are more based on patterns. You have a 5 minute M move down, right? And this is a 5 minute W. That's kind of an accumulation schematic that will run up to here, which probably does in the next day. Again, if you look on the 15 minute, you'll see the creation of a 15 minute W, which is what I like to see. I'll make this up. Boom, beautiful. And that's it, right? So if you were to, it's up to you on what you want to do and how you want to interpret these situations, these scenarios. So once again, the most difficult part of trading is that everything is subjective, right? Everything is completely subjective, and everyone has their own opinions, and everyone can see the market very, very differently, right? If you look at this, right, what do we like to trade? We like to trade patterns. We like to trade in accordance with these patterns, right? Because why? It's not because I'm a chart pattern trader. I'm a whatever works for me trader, and I'm going to use everything at my disposal to have a higher probability of success. Not to say that you're afraid of losing, but who wants to lose when you don't have to? It's like suffering. You don't get a cookie for suffering. You don't get anything, right? You get to build some character, right? But then it begs the question of when does the suffering stop building character, and when does it just begin to harm you? That can also be questioned and thought about and said, hey, maybe it all builds character. So as you can see, we filled 473 like I just said. Filled, like I just mentioned. Again, it happened in the overnight session, right? Came back down. So at this point, I see we filled and now we came back down, right? And now you have the indications of bullish market structure. So because as you can see, like we went up, so we're obviously bullish. And then price decides to, at the open, be initially bearish. Oh, fuck. Move. Right. Price comes down, comes back, comes down, right? You have the initial 5-minute W, right? But understand that we did go up a little bit and we may go down, who knows? But there was a 15-minute, half of a 15-minute M. So I would like to see the completion of this, right? And you have a 5-minute M over here. I don't want to fight that structure. So now we have the beginnings of a 15-minute M. Right now we have a beginnings of 5-minute M. So I don't want to fight that. So I would take this somewhere along here to maybe here or here. See what happens. I guess we're not getting it. We came down and then from 474 to 473, and it doesn't look like we're gonna make that move down. Looks like we're just gonna settle and make a move up. Right. After I see all of this, the best thing is to look at multiple time frames. See, when I'm looking at 5-minute, I don't get to see all the details that I really want to see, which makes it harder when I do this because like 5 minutes worth of information is happening, and I'm not able to show you that. So let's clear that up. As you can see, we have this W shape. Came up to here, which means we are continuing a bearish market structure. We came back down here with the creation of this W concept. Right, when I see this, I think we're going to run right back to here, which we did. Understand that, and then you can take the sell off right here and run it down to wherever it has to run down. Right, that's in line with the 5-minute M that's right here and the 15-minute M that's halfway through completion. I'm not going to fight the 15-minute trend, especially if I'm entering on the 1-minute chart. I'm going to take that look to go bearish as far as it can go. I'd probably take profit over here, somewhere along here. Not to say it has to be perfect. If it goes down more, that's perfectly fine with me. I made my stuff for the day. Right, we have break a structure, came back, tap back over here. I want to see what this does. From the 5-minute and 15-minute perspective, we are still bearish. I want to see a wider U shape. I want to see continuing to show that we're not just making a retracement to trick some people then go back lower. So during this time over here, I'm seeing positive signs. I'm seeing highs above the previous ones, and I'm now, I want to look at the 5-minute and see what that's giving me, see what the 15 minutes giving me. I see that we're already creating a bit of a W shape. I want us to fill the top here, right? So that's also what I'm seeing. That's looking really nice to me. Granted, if you go on the 5-minute around here, I'd probably want to buy it here because we already went about halfway. We still have another dollar left. Let's see where we can go. Oops, we would have taken a loss. That's perfectly fine. It doesn't change the indication, and sometimes we take losses, and sometimes this is why looking at multiple different time frames can help you to mitigate those losses, but losses do happen. I want to see a pullback somewhere over here, then I can take that. Looks like it's not going to give it to me. Oh, it did. Great. Entered over there, and then let's see what happens. Are we going to close to the top? Yep. Once we broke this piece over here, I don't want it anymore. Let's sell somewhere over here. Still $1 in profit. Still beautiful. Do we leave a little bit of money? We probably might have, right? it just depends on what's going on. I don't have the time frames handy on this one, but the 15-minute was bearish, right? It looks like we filled the accumulation. Looks like now we're probably gonna make a 5-minute F and then come back to the top here. That's what my estimation is. Let's see. It looks like we're getting higher highs. Yep, we're gonna continue to go. Oops, no, guess we're not. I want to see a close below this piece for us to continue bearish. I'm not going to shift my focus to be bearish unless we close below here. But then again, you know, it's tough because I want to monitor this on the 5-minute. Right, so where were we? Were we here? Or were we here? We were here. Right. Were we? I don't really remember. I'm not really sure. Not really sure, but either way, once you see a 5-minute pattern, 5-minute pattern that lines up with the 15-minute pattern, you are in the right direction. You want to be in the right direction. Then make sure the 1 minute is aligned. The 1 minute, 5 minute, 15 minute, 30 minute are aligned. You have a much higher probability for trade. So, granted, I don't really remember. I think we were going to take this and then write it down, right? We have a 5-minute 5-minute W. Let's take that up to here, right? Now we have 5-minute, another M. So I understand, right? I think that, like, when you get better, you'd be able to look at this and be able to see the M's and W's before they seemingly happen, right? We're running back up to get to a premium zone, then we're gonna fall back, right? That's all that's going on here, right? Ran up to the premium zone, right? Could have got this move over here, right? And that's why sometimes when people, like, especially when I was beginning, people say the 1 minute is, it's pretty confusing and you can get faked out a lot. So that's why it's very important to have a combination when you're looking at this, because just like we saw the way I got faked out just now, when I took a loss on the setup that actually won, you know, it would require a re-entry, and sometimes a re-entry is not the worst thing, as long as you just remember that in a trade by trade, you're not really going to make money, but over the course of 100 trades, you're going to make money, and you're going to be taken care of if you follow your rules. So that's why I'm shifting my style and entry, not entry criteria, but more of my strategy toward pattern based, with understanding accumulation, distribution, Wyckoff, and that type of stuff. I think it's very beneficial, and having a very good understanding of the 15-minute, of the 30-minute, the 1 hour, making sure they're aligned, because when everything's going in your favor, it's kind of difficult to be wrong, and even when you're wrong, you can catch it fairly early. So I understood that we have an M over here, right? We're going to make the first leg down that we did. We came back up, right? Then we came back down, right? So this little thing is just going to make a 15-minute W within the bigger 15-minute M. And I want to see us come down a little bit, and let's see what we do. Right? Even though we didn't go down all the way to here, this is still a dollar move, and that's still a profitable trade. So you would have trade catching this M down right here, catching this little accumulation over here, and then taking this put or short, wherever you want to call it, and taking this down, right? To see where we are, I would have to look at the 30, have to look at the 1 hour and see what price is giving me now, and kind of remember what price is going to do. Granted, we're bullish on this week, so price probably wants to go back up. So we're creating another 15-minute W. I wouldn't be very surprised if we continue to go higher and go to 475.2 or whatever. So I'm looking to be bullish. Great. I mean, this is just so you can see the face to the name, and see who's educating you and providing you value. So, yes, I mistimed this. I thought we were going to continue to go up, and in a sense, we did, because I want us to go to 475.2. We went to 475.02, which is 18 cents away. We still made a move up, but then we came back down, right? Just like anyone else, I take losses in this game. I'm not afraid to admit it. I don't always get everything right, but when you look at things more closely, like you can see things before they happen, and that's all I'm trying to tell you. For example, when I'm looking at it on a 15, the candles are too big for me to react, because by the time I click them, it's already a huge move. So that's just what you have to be mindful of. So that way, what I'm preaching is just make sure you have all the setups open, and I'll show you exactly how I do that. So it's fine. Let's put this in 1 minute. 5 minutes, right? Just for exemplary sake, then I will have 15. Then I will have the hour. Either the 30 or the hour. Either will probably work, but I can switch in between them. It's not like a hard fix. So this is actually like pretty beneficial, because now I can show you from multiple different timers. Why didn't I think of this before? So is this the day we're talking about? Great. So let me just find my footing with this. Wow, why didn't I think of this shit before? This is great. Why didn't I think of this before? So as always, we're not going to cheat and kind of let's remove all of the drawings. Clear drawing set. I don't want to clear drawing set. I want to undo that line. No drawings. There we go. Where were we?
It's hot down here. Let me take out the heat for a couple of hours.
Okay.
We'll put it on back around in the cold.
Yeah. So, if you like these type of videos, raw, unscripted, no edits, I'm dedicating my Saturday for you guys. I got some work to do. Gonna make some more videos for you guys to educate your minds, get you guys on the right path. Make sure your emotional control is all the way up there. Make sure you're using your logical brain and not your emotional brain. Make sure you're understanding your emotions and not running from them. And all of that ties back to trading. All that ties back to just being a healthy, functioning adult. And I believe that if you're under my guidance, if you're under listening to me, and I don't mean to say like I know more than you, but I've been through some things, and I've been through a struggle, and this journey trading has made me the man that I am today, and I would love to share with you my insights so you don't have to struggle in the same way. So as you can see, where are we? 11:30. Go up to like right about 11:30. Right, so over here, right, let's make all the charts match up, right? 11:15, 11:30, right? Beautiful. 11 o'clock. Can't really go much further, but look at this. This is quite beautiful. So as you can see, on the 1 hour, it looks like we're forming an M. On the 15, looks like we're forming an M. On the 5 minute, we have an M, right? And now we're sweeping this piece to make a bigger M, right? Over here, you could see, candle by candle. I don't know who else is going to show you shit like this. So I hope you do appreciate the level that I'm going to get into to teach you guys. Right, this is what people pay for. As we can see, break of structure above here, right? You could have entered here, right? You would have been in some minimal drawdown over here, or you could have entered here, right? Either way, even if you entered here, still beautiful, right? But I think the smarter entry would be over here, because equal lows, I want to see 2 failures to go lower on the 1 minute time frame, and then right over here you see, if I were to see this if I were to see this on the 5 minute, I would have gotten in. This is a sell-off candle, so this would have given me a little bit of initial hesitation that we could go like this, come back, and then come down. But once I saw this, I probably would have been kind of mad and think I kind of missed out on it. But if I were to see this, I would have been very happy and refreshed and say, okay, we're gonna run. Price is gonna run from there to the box, which is here to the box. As you can see it clearly. You can see it clear as day. Then I would look on the 15 and I would say, look, we have the rounding effect, right? We have the rounding effect that I talk to you guys every single video about, the rounding effect that's going to go right to the top and satisfy obligations, right? So on the 15-minute, we're continuing. We have this piece over here, which is basically equal lows refusing to go lower. This is the next candle closure of 10:15. This is, I believe, candle, I don't, whatever. It doesn't matter. Again, failure to go lower. Beautiful entry. Get in there, right? We're going to ride it to the top, right? After this, we see the 15 and the M. So I'm going to want to take this somewhere over here. Take it down to here, right? That's intraday. Good enough for me. Then we're going to see what the 5-minute looks like. So on the 5-minute, you would have taken this as the same thing as this. You would have taken this move down. You would have understood that we're in some type of little demand zone over here. Candle before the move up. So say like somewhere over here. Right, candle before the move up. Oh, let's get precise. Let's get very precise. So candle before the move up. So the expansionary move up was over here. For anyone who knows precision trading, right? That's it. So order block, whatever you want to call it, right? This is precision trading, and as you would have seen, this is basically a 5-minute W, which is going to lead us to the next leg higher above this piece. We're going to understand what the 15-minute is saying. Okay, so this piece is this piece here, and this piece here, and this piece here, right? So, yeah, you would have seen this 5-minute W, right? And everything is a risk, right? You would have entered here, stop loss somewhere below here, so 69 to 40, put a couple more cents down there. It's worth the risk, right? You're basically trading maybe like 30 cents for $1. It's whatever the risk reward on that is, it's enough. It's enough. And yeah, you would have taken this, right? You would have seen this 5-minute W, then you would have seen this 5-minute M, right? And you want to see what happens after that, right? Okay, right? We're still in bullish market structure until we get closure below this piece. I don't even want to think about going bearish because I don't want to fight the trend, right? Closure, nice. Now I want to see us do some type of tapping back somewhere. That's what I would like to see, right? I want to see another 5-minute candle closure. Okay, this is what I want to see. I'm looking to take this down to here, right? Let's see what we get, right? So you want to make educated decisions. You want to see a 5-minute closure. Okay, great. We're in. It's over here, 474.56, somewhere around here. Right around here, I would get in. Because, yeah, perfect. Bro. This is why trading can be difficult. For this exact reason. Because sometimes it will do this, right? So let's say you entered over here, 47. It went up to 80, right? I probably would have gotten stopped out. But again, that's because I trade with a very thin stop loss. That always begs the question of, do you just enter up here and use your intuition and gut feel? That's one of my biggest things I'm trying to do, because you always try to account for the break and the retest and then the breakdown back, right? Sometimes it happens, sometimes it doesn't. Because even if you were to enter here, you would have been in a good amount of drawdown, about 40 cents. I mean, some people have a really big stop losses, and I think if you have a decent sized stop loss, you wouldn't really have to worry about things like this. So let's say this was a loss and you entered back over here, right? We could always do that, right? Price ran to wherever it had to go to. I want to see it come back down to here. There we go. You would have had a minimal loss over here. Enter back in, right back here. It's tough because sometimes you want to account for that slight move up, that breakdown, that retest back up, and then that further breakdown. Sometimes it doesn't always happen. That's kind of the bridge between intuition and just seeing how things feel, right? Just a few days ago, I don't remember the exact details, but either way, if you took a slight loss there, you can always re-enter. It's okay. It doesn't like, and that's just what you have to understand, that if you're not playing with the big stop loss, you can't be afraid to re-enter on certain things, especially when the higher time frames are agreeing, right? So in all of this is all right here. 10 was no. Let's keep going. Right, this is all within here. So on the 15, we were just 3 straight red candles. We're just one big red candle. So everything is subjective. Price moves how it wants to move. And are you going to be right all the time? No. But I think to save yourself a good amount of trouble, have a decent stop loss that will really prevent yourself from losing unnecessarily. And that's probably the biggest thing, because the thing with the whole stop loss risk reward thing, a lot of trading depends on timing, because there's been many times where I know what price is going to do, I know it's going to go down, but it's simply I just got stopped out, and because of my wrong timing of the entry, right? Because sometimes you would get this breakdown, right? Sometimes you need to move back up. So it's very subjective, and there's been many instances where this wouldn't happen, and we would just fall straight, and I would wait for the that move back up, and it doesn't happen. So it's very subjective, and either way, even if you were to take a loss here, you could have gotten back here. So that's that. I feel like I've been talking for super long. This looks pretty bearish to me. I don't know what the high term. Let's see what 1245 is doing. Yes, it did look like a bear flag. This doesn't look very much like a rounding. Oh. I grow tired. And you see these things as they happen, right? If you see 5 minute 1, 2 come back up, are we gonna get a retrace? This is exactly what I'm talking about, where it's hard to time because you need some type of retrace to get in. You don't want to chase prices. This is a nice example of accumulation where we're gonna run up, right? We're gonna take off here. I'm hoping that we can get to here, then we have a nice little pullback. I'm hoping that pullback is indicated on the 1 minute time frame, because it's not indicated on the 5 minute C. On the previous example, we had a 5 minute green candle indicating that slight pullback. So let's see if we do get something, right? This is here we didn't get it, so that's why things can be challenging, especially, right? I mean, you have this, but what is that? That's just a doji, right? What is that? So things can be challenging, and I say once I saw candle close over here, I would probably enter somewhere over here, which, let's mark this off. Yeah, that's perfectly okay. So that's some 1 minute breakdowns, and I really hope you enjoyed that. Anyway, I hope you're doing well. I appreciate you. I appreciate you watching these videos, and let me know what you want to see, how I can help you, and that type of stuff. So take care of yourself, right? Peace. Love you, okay?